It is March 21st. First of all, I want to apologize for the messy demeanor. I just finished working out and I'm doing some laundry at the moment, but I wanted to record this real quick after my failed attempt to record it this morning. As an intraday day trader, I do a review of my trade of the day every day. And so here it is, my review of BABA, my trade of the day. So BABA had fresh news this morning about it cutting its workforce by 30%. So BABA has been in a multi-day downtrend if we look at longer term charts. And you can really see the pattern that I'm talking about play out here. So as we go to the smaller time frame, the time frame in which I trade, what I was looking at is this gap. And this gap basically indicates that we might have a possible trade opportunity. Now what our trade opportunity is we watch for the initial test of pre-market lows. We attempt to fill the gap and reject multiple times, and then break through the VWAP in the 21-day. This essentially signals my edge and my entry for the trade, because it gives me a high probability that the stock will continue its downtrend due to the fact that it has rejected the upside move. So with that conviction, I enter 100 strike puts expiring this week at 950 on this circle here, as we move away from the 21-day at 9:58 as BABA tested PM lows and showed weakness on the tape. Volume on this move was almost half the previous candle. You can see here, showing that this was a false bounce with a bearish engulfing. I entered short 3 on the break of this consolidation, and as the VWAP began to slope dramatically with the convergence of the EMA, I noticed this consolidation and the rising volume meant that I could enter and size up for my third contract on the break of the resistance, or support rather, at 101.05. I went short 4 on the break of 140 at 10.19. It just began to absolutely melt and move below the candle's previous low, and this was in anticipation of the 99.5 move. Now I covered 3 at 10:36 as a consolidation and a slowing of the tape was apparent. I've been using the tape to determine my exits and entries more, looking for the volume and basically speed of the print, how fast people are buying or selling. It basically determines my conviction as to whether or not to enter at that price point. And the slowing of the tape was very apparent. I basically took risk off the table. I had 4 contracts. I took 3 contracts off the table as the market began to find a bottom. I can pull it up here. If you look at the overall market on the 15 minutes, The overall market on the 15-minute around 10:30 began to show a slight lift. You can see on all four screens, all three screens here, the QQQ, the SPY, the IWM. This lift caused me to get spooked out and cover 3 of my short contracts, and I was out at 10:36. I was flat at 10:37 at the close of this candle, because it was essentially a textbook example of using the first candle of strength in a bottoming pattern as your exit in a trade. Now, my ultimate exit would have been the cross of the 21 day, which you can see I would have had 1, 2, 3 contracts in the money for a move from, I can't get my measuring tape here, for a move from this to this. So that would have still been a $3 move. Now, this was my trade of the day of BABA on March 21st. Thank you for watching. Let me know if you liked it or if it was cringe. Any pointers? Have a great day. God bless you all. Goodbye.